following. It says, before 1992, there were few official options available to people wanting to access to small amounts of credit. Banks were not offering microcredit, so the borrowers had to resort rather to pawnbrokers or operators in the informal sector, the machinosas or other informal systems such as stokvels, burial societies and rotating savings and credit associations, ROSCAs as they were called. As the rules governing the provision of credit evolved in 1992 though, a whole new industry arose. Let's talk about that industry and how it's developed over the last 20 years with Hennie Ferreira, who is the CEO of Microfinance SA, who's in the Power Lunch Johannesburg studio. Hennie, thanks very much for joining us. How big is the microfinance industry now?
Let us start off by saying, in terms of our association, we have 2,035 offices associated with us. And the microfinance industry today is not limited to only credit being provided by my members and microfinanciers. It includes banks, retailers and others. And as a result, we have seen tremendous growth, but a lot of the growth has been stimulated mostly by loans getting bigger and terms being extended. So our market has grown. The number of providers that has come out to formally participate in the industry has grown, and we also find that there's an overlap between banking credit and, let's call it, non-banking credit. All of this was really stimulated by the introduction of the National Credit Act, Act 34 of 2005, and that really legitimized the market. Although prior to that we had the Microfinance Regulatory Council, and it opened up the door for, amongst others, also the banking fraternity to move into the space.
Yes, it's very interesting to see actually when you listen to the results of the Big Four, as we have done on Power Lunch over the last 3 to 4 weeks, Hennie, to see that in the old days it was the smaller lenders, some of them were illegal at the time, coming into the market and trying to nibble away at what potentially in the future would be the big banks' clients. And now the big banks coming in and muscling in on a sector that previously they may have ignored. Now, when you talk about the extension of loans to longer terms and the loans becoming bigger, is that what people are worried about? Because unsecured lending has been in focus now for several months, and it's caught the attention of government and the regulators. To you, is it a dangerous situation that's evolving at the moment?
It is a dangerous situation from the perspective that at the time of the initial creation of the National Credit Act, we created a category of credit known as short-term and unsecured. Specifically, the unsecured has no limits to it in terms of the term and the amount which can be extended. And at the time of the creation of that particular piece of legislation, the average loan sizes were small, let's say 10 to 12 to 15,000 Rand, and it was rare to find terms of longer than 36 months. Today we find products of 230,000 Rand over 84 months being unsecured, and we're not comfortable with that. Having said that, however, if we look where the growth has come from, it's come out of the banking type space with these sort of products. People providing the smaller loans have not seen such dramatic changes, and the area has been fairly consistent. The more important aspect, I think, at this stage is, and that is different from before, is that when this credit was extended at the previous disaster which we had in the industry, it was like the unspeakable. At this point in time, people are talking about the bubble, they alert. The South African Reserve Bank has looked at it and they brought out a position on it. The National Credit Regulator is looking at it all the time and has put their view on the table. And there's also private institutions doing research all the time. So the sensitivity with regards to a possible credit bubble is far higher, and generally it leads to credit providers being far more sensible and far more cautious in how they go about this. In terms of the way the market is being segmented at the moment and banks being into this space, it's all in an effort to gain market share. And many of them are doing this by consolidating. The dilemma obviously is when a person has been consolidated, unless that person has the discipline to not go back to his previous lender, he may find himself in difficulty, especially if he doesn't properly and fully disclose what his exposure is.
Hennie, just going back to right at the beginning of your statement, you talked about loans of up to 230,000 rand. That's not microfinance, that's proper finance. I mean, that's a massive amount of money. What sort of interest could a loan like that attract for the borrower?
It could be charged and it would be legal within the parameters of the National Credit Act, which is repo rate times 2.2 plus 20. That would be the maximum rate. What we are finding in the banking environment is that they would categorize their customers, and those who have a history of well performing and meeting the obligations, they may be able to negotiate a lower rate. To your point of, is that a microloan? I think that's a debate that also needs to be taken in South Africa. In my mind, at the consumer level, that is not a microloan. That should be a straight personal loan. That client does not have the security apart from the fact that he can offer a payslip. That is not a microloan. I think there's another discussion which also needs to be had, and that is that in South Africa we need to be able to also provide credit to people who want a microloan which was set up to start a business. The original definition of a microloan was to get people to get themselves going in the market at the lower end and to start a business without being able to provide a payslip. Much of what we're doing at the moment is consumer lending, and in terms of job creation, micro-lending as per the original definition. If you go back to the days of Grameen Bank and Professor Mohammed Yunus, is something totally different. I agree with you.
Hennie, can I just interrupt you? Sorry to interrupt you there. What you've said now has really struck a chord, because we talk about the world being awash with really, really cheap money and liquidity everywhere, but not going to the right places. So what you're saying is that the distinction between somebody who just wants to borrow money maybe to pay off another loan or to do something that is not constructive for the betterment of the South African economy or their individual fiscal status, you would then probably say that there's a case for a state microloan business bank. I mean, maybe that's an idea.
There has been many efforts to that extent. Without fail, it's not been a success story in South Africa. There has been some very serious restructuring in that area, and as an association we are also focusing on that in the year ahead, together with our consumer lending. But it's an area where as South Africans we have much to do. Working with the state is an option, and there are two angles which I think needs attention. One is handling the first risk. As a fraternity, we are not equipped to work in the space where people have to be capacitated to really make use of the traditional microloan. And secondly, tied into this is the cost of capital. The cost of capital to play in our market, unless you're able to raise the capital in the way which banks can do via savings, it's excessively extensive. If you then have to carry a provision on top of that, it becomes a rather complicated and risky business.